Hello, and welcome to the Freddie Mac Connect Accelerating Growth in the Budding Shared Equity Market session. All lines are in listen-only mode. This presentation is being recorded and will be available following the session. If you have any technical issues, please use the Q&A feature and someone will assist you. Lastly, using the handouts icon, you will find links to the speakers' bios and the presentation deck. With that, I will turn it over to Dennis Smith, Affordable Lending Manager for Freddie Mac Single Family. Dennis, the floor is yours.
Thank you, Camden. And good afternoon and welcome. I'm Dennis Smith, the Shared Equity Market Lead here at Freddie Mac. I'm joined today by Mary Gasparian, a manager on Affordable Lending Sales team. Good afternoon, Mary.
Hi, Dennis, and everyone participating in our session today. I'm really looking forward to this conversation.
So am I, Mary. So let's get started by taking a look at today's agenda. In today's session, we will be defining shared equity homeownership, how we're supporting the market together, ways that we're making it easier to identify and support shared equity opportunities, and ways that we're moving shared equity homeownership forward. Mary, I'm certain in your work with customers, you get a lot of questions from the field. Let's start with some of the questions that you may have.
Absolutely, Dennis. So one of the general questions we often receive is about an overview of shared equity homeownership. Could you please define shared equity homeownership for those in our audience who might be new to the concept and those who might benefit from a refresher?
I think that's a great place to start, Mary, and level set. Shared equity homeownership is homeownership opportunities with lasting affordability, not just for the customer that is buying the home today, but the subsequent customer who is purchasing the home in the future. Shared equity programs are administered by community land trusts, not-for-profit organizations, and state and local government agencies. Shared equity homeownership use legal documents such as a ground lease for community land trusts, or resale restrictions or deed restrictions for income-based resale restricted properties to keep these properties affordable as they are resold over time.
You mentioned that shared equity typically includes resale restrictions. Are there different types of restrictions, Dennis?
So that's a great question, Mary. Let's take a look at the two models of shared equity homeownership programs that Freddie Mac supports. And these are really identified by the type of legal documentation that they use. Let's first look at community land trusts. A community land trust will sell the home to an income-eligible home buyer at a below market rate. Yet, that community land trust retains ownership of the land beneath the home and sells only the improvements to the customer or the home buyer. The legal instrument that they used is a long-term ground lease that is an agreement between the community land trust and the home buyer for usage of the property. The second type of shared equity home ownership are income-based resale restrictions. They reduce the sales price to below market levels through the legal instruments. These could be done through deed covenants, government or philanthropic subsidies, inclusionary zoning, and affordability incentives. And these usually use restricted covenants, a deed restriction, and at times an affordable second. So really the type of program is dependent on the program structure and the type of legal document that they use for their program. I hope that helped, Mary.
That helped a lot, Dennis. Thank you so much. Could you please walk us through the process that a lender would follow to support shared equity homeownership? For example, can we begin with community land trust process?
Yes. So there's often questions about, are they the same process when facilitating the fulfillment of a mortgage for a community land trust? Many things are similar to what you would do for a traditional mortgage. The main difference is that legal document or that ground lease. So on the screen, you'll see a roadmap for originating community land trust mortgages, which includes a ground lease review. So it starts with the step of As an originator, as a processor or an underwriter, do you have a copy of the ground lease? And then you have to review that to Freddie Mac's ground lease checklist. Then there are opportunities if there is a certified community land trust, such as those through the Florida Housing Coalition program, that you may not have to review that community land trust ground lease. But what you will do then is see if that ground lease conforms to one of two national industry standards, the National Community Land Trust Network 2011 ground lease or the Institute for Community Economics model ground lease. If it conforms to either of those two, then you will prepare Freddie Mac Form 90, our Community Land Trust ground lease rider, have it executed, and make certain that is recorded and retained in the mortgage file. Now, if the Community Land Trust does not conform to one of those two model ground leases, then Freddie Mac's prior written approval is required. So what does that mean? That means that you reach out to your account manager or your customer relationship manager, and you supply a copy of the ground lease and ask Freddie Mac to review that. Freddie Mac will go through the process where we review that Community Land Trust ground lease. And if it is approved, we'll issue a term of business for non-standard model ground leases. And then you can originate the loan and deliver it to Freddie Mac. So hopefully that answered your question a little bit about the differences in community land trust. You have the ground lease review and Form 490 that is required to be filed.
Absolutely. Thank you so much. It did very well. You mentioned the Florida CLT training and certification program. Can you tell us more about that and its benefits?
Sure thing, Mary. We worked with the Florida Housing Coalition to develop their Community Land Trust Institute. It provides technical assistance to community land trusts on how to manage and operate their program. As part of the certification through that program, they actually look at the ground lease and do the review. So if a program is certified by the Florida Housing Coalition, the lender may not be required to review that ground lease. Each program will receive a certificate once they are approved by Florida Housing Coalition, and that is something that community land trust will provide to you in addition to a copy of their ground lease. Now, you must obtain Freddie Mac's written approval before selling us a community land trust mortgage using the Florida Housing Coalition certificate in lieu of the ground lease review. So hopefully that explains a little bit about the Florida Housing Coalition program.
Absolutely. And it sounds like it would make originating CLT loans much easier for our lenders. I want to mention that CLT mortgage is a guide offering and lenders do not generally need a term of business. However, is there an instance where lenders would need such a term of business?
Yes, you are absolutely correct, Mary. Any approved Freddie Mac sellers can originate a community land trust mortgage. The only time you would need a term of business is if you want to leverage one of the certified community land trusts through Florida Housing Coalition and use that certification in lieu of the ground lease review, or in the other instance I mentioned, when Freddie Mac reviews and approves a non-standard model ground lease, we do require a term of business for that. So hopefully that clarifies for our sellers when they need a term of business and when they do not.
Absolutely, and thank you for that clarification. Another question that we often get asked is how to identify a CLT mortgage in Loan Product Advisor and Loan Selling Advisor. Can you walk our sellers through that process?
Mary, we've tried to make it easy. So within Loan Product Advisor, we have loan program identifiers. So as you will see on this screen, we have a screen capture of the loan program identifier field. And you can see that Community Land Trust is an applicable loan program identifier. So if the mortgage is a community land trust mortgage, when put into Loan Product Advisor, you would select Community Land Trust. And then you'll want to double check your LPA feedback certificate to make certain under Offering Identifier that it lists Community Land Trust. I would also like to say that it is possible to select more than one loan program identifier. So if you have a community land trust mortgage and that borrower is below 80% of area median income, they could qualify for Home Possible. So in that scenario, you would select both Home Possible and the Community Land Trust Loan Program Identifier. In addition to selecting the Loan Program Identifier for Community Land Trust, that helps Loan Product Advisor because it will take one of the flexibilities for Community Land Trust and do the calculation automatically off of the appraised value versus the purchase price when calculating the loan to value. So there's a lot of great opportunities when you select that loan program identifier.
That sounds great, Dennis. Thank you. Can you talk about how originating loans on income-based resale restrictions, resale restricted properties may be different?
Yes. We don't quite have the flow chart that we do for a community land trust. But what I've tried to do is lay out side by side the two instances of income-based resale restricted properties. So once you're reviewing the restrictive covenants, the first thing that you'll do is look to see if it terminates or survives foreclosure or deed in lieu of. So for example, if they survive foreclosure, then the appraisal must reflect the impact of the restrictions on the property's value, and when available, must be supported by comparables with similar restrictions. And for that loan to value calculation, when restrictions survive foreclosure, it's just like a traditional mortgage. We use the lesser of appraised value or purchase price. And the down payment requirement is based on the resale restricted price. Now, if those restrictions terminate upon foreclosure or deed in lieu of, we have a loan program identifier for that too, and it's called income-based deed restrictions terminate. Things to keep in mind when ordering the appraisal: the appraiser must reflect the property's market value without those resale restrictions by using comparables that are not resale restricted. For the LTV calculation, if restrictions terminate upon foreclosure or deed in lieu, we use the appraised value of the property without the resale restrictions. And again, the down payment is based on the resale restricted price. So a couple of different items to keep in mind when originating and fulfilling those income-based resale restricted properties. So hopefully that helps answer that question, Mary.
Very helpful. Thank you. Lenders often ask us how they can identify shared equity opportunities in their areas. Are there any resources available to them for easy access?
You know, Mary, that's a question that we've heard from our sellers. So one thing that we did is we worked with Grounded Solutions Network, a leading nationwide nonprofit housing intermediary that works with shared equity programs. And they performed a census of community land trusts across the country. So this map, each dot represents where there's a community land trust located across the country. There's currently 314 community land trusts or shared equity entities in the nation, located in 46 states, as well as Washington, D.C. and Puerto Rico. The interesting thing is they did the study originally in 2011 and completed the survey earlier this year in 2023. The Community Land Trust saw nearly 120% increase in the estimated number of homes that they were bringing into the marketplace compared to the projections in the survey conducted in 2011. So at the end of 2011, they said, hey, we're going to bring 7,000 units to the marketplace. But in 2022, when we collected that data through that Grounded Solutions Network survey, that number increased to 15,606 shared equity homes. In addition to the number of homes increasing in the marketplace, there's been a nearly 30% increase in the number of shared equity program providers in the community land trust space. So it's definitely an area that's growing. It all started back in the 1970s with only 11 organizations. But when we look at it today with over 300 organizations, we hope that number will continue to grow. But this map doesn't really offer our sellers a lot of information, right? It's a dot on the map. So what do we do with that information? So we created a Freddie Mac Community Land Trust database. And this is available on FreddieMac.com. If you were to Google our Community Land Trust Mortgage product page and scroll to the bottom, you'll see that we have a tile outlined here in green that says Freddie Mac Community Land Trust Database. We've taken the information that was collected through the Grounded Solutions Network survey, through work of our own, and put this into our own database format. The good news about a survey is it gives us information about the market. But the bad thing about the survey, it's just a snapshot in time. So at Freddie Mac, we put this information into the database and plan on reaching out to these community land trusts to make certain that the information that they provided in the survey is accurate. And what is that information? The first column in our directory will show the community land trust name. The second column will give the address, the contact phone number, and then the county that they serve. That way you can match up community land trusts in your service area. The column after that is the state column, and then the next column is the ground lease type. And this has been self-reported by the Community Land Trust to give an insight into what their ground lease is modeled off of. Is it modeled off of one of the two model documents, or is it a document that they created on their own? So I will say your due diligence as a seller is still required. Again, this is self-reported information from that Community Land Trust. And once you do your ground lease review, you will still need to make certain that it conforms to one of those two model ground leases. The next to the last column says certification program. So if the Community Land Trust is certified by the Florida Housing Coalition, it would indicate Florida Housing Coalition in that column. That gives you insight into what community land trusts are certified by the state of Florida through their Community Land Trust Institute. And then this will also list programs that Freddie Mac has reviewed and approved under the non-standard model ground lease review process that we talked a little bit ago. So it gives you some insight into what programs are certified or have been reviewed by Freddie Mac. Now, I will say that a term of business is required for you to take advantage of the Florida Housing Coalition certification program and also Freddie Mac's review of those non-standard ground leases. The furthest column on the right are self-reported the number of units that community land trust will be bringing into the marketplace in the next 6 to 12 months. This will give your originators who serve that marketplace an idea of how many transactions may be available in the market over the next 6 to 12 months. All of this information is self-reported by the Community Land Trust, and we do update it regularly as we perform outreach to the Community Land Trusts to make certain that information is accurate and up to date. So how would I use this? If I'm an originator and my market is, let's say, Tallahassee, Florida, I would definitely look for the state by state Florida and identify the community land trusts that are in my service area. And I would reach out to those community land trusts and let them know that I offer Freddie Mac's CLT mortgage offering, that I would love to help your home buyers achieve their dream of home ownership and support your community land trust. So this is a way for us to keep this information up to date and keep it readily available for you and your staff to check back on to make certain that information can be helpful to them. As we identify new community land trusts, we'll also add their information to this database. There are some blanks in the database right now, as you can see by the screen. Keep in mind that a lot of this information is either self-reported or publicly available information. So each time that Freddie Mac reaches out to these community land trusts, we'll complete additional information within our community land trust database. So that's a great way for our customers to identify those community land trusts in their service area and reach out to them in support of their programs.
So it sounds like we have some great resources to point our lenders to, Dennis. With the number of programs out there, many of them may have documentation unique to their program. Is there an effort to standardize?
That's a great question, Mary. Very similar to the model ground leases that we discussed earlier for community land trusts, we worked with Grounded Solutions Network and Fannie Mae to develop the 2021 Model Declarations of Affordability Covenants. It's something where we wanted to introduce documentation that program stewards could use. That way, as lenders look at them for approval, they are standardized. So where can you get a copy of these documentations or these model documents for income-based resale restricted programs? If you go to FreddieMac.com and search mortgages secured by income-based resale restricted properties, that should bring up our mortgage product page for income-based resale restricted properties. If you scroll down to the bottom of the page, you will see that we have additional information in these tiles. And I've outlined with the green box a link to the 2021 Declaration of Affordability Covenants. So if you select that link, it will actually take you to Grounded Solutions Network website, where they have the model documents that we developed in collaboration with those other entities. And as you can see on the screen, you actually not only see copies of the model documents, but there's also a companion piece that goes with it. You can see that there's items highlighted in green. That is instruction to the program stewards of information that they must complete in the document. There's also areas color-coded within the document that provide direction as whether it is something that is required by the GSEs for financing, or if it is optional language for that program steward. And one example of that is in some states, there's a 90-day right of first refusal, but in other states, there's a 120-day right of first refusal. So in our program, if I was starting a program, I would look at that document and see this is something that, from my program perspective, I need to make certain matches with our state requirements. So I know that if I live in Massachusetts, that time frame is 120 days. So when I'm creating my document to have the customer execute, I would put in 120 days. So this is just another tool that we're trying to get into the marketplace to promote standardization. That way it's easier for your originators to walk through this document to make certain that the home buyer understands that document. And also, as you're doing your review of that document, to identify any requirements in our selling guide that there's standardization in the industry. This was launched just this last year, and more programs with income-based resale restricted properties are beginning to adopt this document. So hopefully that helps, Mary, with some of the standardization that we're trying to perform in the shared equity market.
Absolutely. It sounds like we are making some great efforts to make it easier to participate in the shared equity market. So for lenders that are interested in participating in the shared equity offerings, what are the next steps and additional resources available to them?
We have a lot of great information available on Freddie Mac Single Family's website. As I mentioned earlier, We have a mortgage product page for community land trusts and income-based resale restrictions, where there's all types of fact sheets, FAQs, highlights to the product, links to our guides, and many of those useful tools that we looked at earlier today. You could always reach out to your Freddie Mac account executive, or feel free to reach out to myself or Mary at any of our email addresses, contact information that is listed on the screen.
Thank you very much for the overview, Dennis. This was very thorough and informative, and we're always happy to answer any additional questions that may arise after this session from our lenders at any time, and we look forward to hearing from our lenders. So thank you all for listening.
Thank you, Dennis and Mary, for your great presentation. That's all the time we have for today. For our audience members, if you submitted a question in our Q&A box, we will have a member of our Freddie Mac team follow up with you after the conference. Your opinion is important to us. Please take a few moments to complete our brief survey so that we can continue to bring you timely and relevant content. The presentation deck will be sent to you following this session. You can also log in anytime after the conference to play back this or any other session. Thank you for your time and enjoy the rest of the conference.
Hi, this is Ravi Shankar. I'm head of single family portfolio and servicing at Freddie Mac. Hey, first and foremost, we want to thank all of you for attending this 8th annual Freddie Mac Connect conference. It was really great to see so many of you and the industry partners again on our virtual platform. As we stated at the start, we hope you're leaving this place with some new ideas, new skills, and a whole lot of momentum to advance the work you're all doing to make our industry stronger. Thank you for joining us and making this event a great success. Our theme this year is Smarter Together. I'm certainly proud of the work we have accomplished this year with our seller services collectively, and I hope that this conference was successful in bridging further collaboration, creating greater synergies, and sharpening insights for your business to make our industry stronger and more resilient during these times. Earlier today, Sam Cater shared some insights on the economic environment and perspective into what the market may look like in 2024. The expectation is that the rates are going to hover considerably above 6%, and home growth softening as housing affordability continues to be on decline. But what I would like to stress is that whatever market condition exists, our commitment to expand our mission to make home possible is unwavering, and we are going to be supporting the consumers and all of you through these times when the rates are high by providing liquidity and products. By working smarter together, we can overcome any hurdle and take advantage of opportunities ahead. This is a great time to change, and we are optimistic about the future. In the second quarter of 23 alone, we helped 372,000 families to buy, refinance, or rent a home, and that includes a whopping 102,000 first-time home buyers. Finally, we would like to extend a huge thank you to all our sponsors, partners, particularly our keynote title sponsors. This event would not be possible without your support. Please help make next year's Connect even better by completing the post-event survey. We look forward to welcoming you back next year. Thank you.